Hello, everyone. We are back live from one of the studios of the 5ers. How are you doing today, everyone? We have a great show for you today. As we have announced, we have Dirk with us today. So let's welcome Dirk. How are you doing,
Hey,
Dirk?
everybody. I'm great. I'm doing very fine. Thank you for asking. Super excited about what 2025 is going to bring trading wise. 24 was an amazing year for me personally. I think everybody who was invested, even stocks or crypto, especially, also had also an amazing year. And yeah, looking forward to doing this today with you. I always learn a lot when I follow your live streams, I have to say.
Oh, that is. Thank you for that. I wasn't expecting it, but thank you. Yes, this year was a. I mean, last year was a very generous year for people who were passively invested in S&P. I think S&P gave a return of 21,
Yeah,
22%, something like that.
about that. Yeah, yeah.
And where the average is around 8 9 depending on the decade you're measuring, of course. So it's about almost 3 times the average. So everyone who was invested in the equities got handsomely rewarded for their risk taken. Dirk, um, let's talk about how do you look for this year. I think people in the audience, they know that you're crypto guy,
Mm.
not only general investment but especially crypto. What maybe today we can talk a little bit about what you expect this coming year will bring us in the scene.
Mm.
Are we
Mm.
going to Is this going to be just one another up year in a sequence of many years, or are we going to have perhaps a temporary top, or maybe it's going to be a down year? Who knows? People in the audience, if you want to ask Dirk, tap into his knowledge and his vast experience, not only in the crypto space but in as a trader in general. This is your moment. We have Dirk with us, so make use of it. Shoot your questions, and we will do our best. I mean, to answer most them, all of them, if possible. So, Dirk, what do you think of this year, 2025, for everyone who is invested or is
Mm.
looking to invest into the crypto space?
Yeah, sure. Maybe it's best if you could share my screen, so I can kind of show what I'm talking about. So, in general, maybe I should tell a little bit of not only what I'm expecting for crypto, because that always goes hand in hand also with probably what the stock markets, or as a matter of fact, all so-called risk-on markets, so specifically stocks and crypto, are going to do this year. And so I would like to, in the beginning, maybe talk a little bit about Bitcoin, what I think is going to happen this year. I want to also talk a little bit about the economic side of things, my forecast, because I think 2025 is going to be quite a complex year. And I'm going to explain what I mean by that. So basically, we are probably going to see very good performances in crypto and stocks also, but then later that year, I see a little bit, gray skies, cloudy skies, a possible recession coming up. So I would like to talk about this again. And it's always funny how, when you look at things like this, how they all come together like at the same time. So let's maybe start here with Bitcoin, and which really is my go-to chart. I think I've talked many times here on the live streams about this chart here, which is the so-called logarithmic regression of Bitcoin. And this is such a beautiful chart and has been working great for such a long time. And what it says basically is like that Bitcoin spends the majority of its time, the price of Bitcoin, that is, spends the majority of its time here in this green channel, which is slowly going up, of course, but flattening. That's why it's a regression. And then we have always one bear market year, which was in our case, obviously 2022, followed by 3 bull market years. 2023 was a bull market year, 2024 was a bull market year. So in 2025 should in general also be a bull market year for crypto. Now, when you look at this chart, there are actually simple takeaways and more, not really complex takeaways, but different strategies you can use this chart to kind of time your long-term investments into Bitcoin, that is. And when I say Bitcoin here, I always mean, all of the crypto markets, because by the end of the day, it doesn't really matter what you invested in, except maybe you buy some meme coins or something. But if you look at the top, let's say top 20, according to coin market capitalization, they more or less will always do what either Bitcoin is doing, or when we have an altcoin season, what Ethereum is doing. And what we see here is, and I was talking a lot about this actually in the beginning of this year, is that usual, you don't see this on this chart anymore, it takes like around 190 to, I think it was like 250 days from the halving of Bitcoin, which the last one you can see here. Let me get my brush here. So this one, the halving 2024, until Bitcoin reaches the so-called frenzy phase. The frenzy phase is when price leaves this green channel and goes really into this parabolic phase, where everybody on Twitter is having laser eyes, talking about price targets of $1 million and so on and so forth, where basically it's up only. And we had this on every cycle yet. I'm looking at the last 2 cycles.
All right, so, I think,
yeah.
Let's see. We have some issues with some technical issues. Let me check if it's me, or can you hear me, Dirk?
I can hear you very well.
Was it me or was it you? I'm not sure who it was, but someone, perhaps it was me, was it?
Did one of us glitch out right now, guys?
Yeah. Well, let us know in the chat, because I don't know.
Says everything works.
Well, the thing is, there is a delay of about 20 seconds between when anything happens, or when we say something, and when people see it at home. So, well, it doesn't matter. Right now, we're fine. Continue if you may, Dirk.
Okay, good.
Yeah.
If not, then please ring the alarm in the chat, guys. So, as I said, we had this here after the halving of 2020. We obviously had this in 2016. The so-called frenzy phase, which is in between those channels. Now, what I said, and I'm pretty sure I said this also on one of the last live streams a while ago, I was here. I expected this frenzy phase to start somewhere between early November 2024, and mid of February 2025. And obviously, we have seen quite some nice price appreciations. It's in Bitcoin with almost 110,000, the new all-time high. But we haven't left this channel yet. So we haven't even started this frenzy phase. And it should now, if history repeats itself, start somewhere until mid of February 2025, which means we would leave this channel here and then go to this blow-off top, which usually is here. Not usually, it always is here at the upper red channel, either the lower line here, red line of the upper channel, or the upper one, which means, and this should happen somewhere, and this is important also for everything I'm going to say later here, somewhere between late April of 2025 and late of October of 2025. This is usually, if we look at the history, kind of the time span, a year to 1.5 years after the halving, when Bitcoin likes to reach its top, its blow-off top. So we're talking here about when everybody's always positive, up only, and then it starts crashing down again, like we saw in the prior cycle, to go back into this green channel again. And last time we even left the green channel to the downside a little bit. So this is why I said before we started the live stream to Victor already, I'm actually cashing out a little bit right now. I'm like, not cashing everything out, but I cash out every month a little bit, because obviously, it's very hard to time when is the absolute top going to be. I'm not able to say that. Like I said, I think it should be somewhere between April and October, but we're talking here about purchases of Bitcoin that I made down at 17,000 to 30,000. So obviously, for an investing period of 2+ years, that's a very good return on investment. Now, what is very interesting is if we align what is happening in Bitcoin with what we usually see on the stock markets. Remember, I said that both, of course, are risk-on assets, crypto, Bitcoin, and stocks. So people flock into so-called risk-on assets if they don't get a lot of interest rate, for example, on the bank account. And we are seeing right now an environment where interest rates are coming down again. Now, if we look at how did the stock markets actually perform under the last 3 presidents in the USA. And I'm always analyzing the USA because what we see worldwide, usually on the stock markets with economies, is that what happens in the USA is sooner or later going to happen, at least in most Western countries as well, because globalization, everything is interconnected. Everybody is depending on everybody. Now, what we saw here last time under the last 3 presidents was actually always kind of the same pattern, be it Barack Obama, be it the first term of Donald Trump, or be it Joe Biden. We saw 1 year of nicely performing stock markets, and then things started to get a little bit choppy. So we had either a little bit of a sideways moves, and when we look at Joe Biden here, when we of course look also on Donald Trump, we saw things going down a little bit. And then, so this phase usually is also for a year to 1.5 years. Again, 1 year prior to the election, then to the next election. So we're talking here about 2028, things are going up again. And I think this is very interesting because the election in the USA, now where Donald Trump was elected, was in the beginning of November of 2024. I think it was 5th November, if I'm not mistaken. And remember what I just told you about this Bitcoin cycle, where I said we should see the top somewhere between April and late October. Especially this late October, plus minus a couple of days, puts us also in the beginning of November. So where we have this natural Bitcoin cycle reaching its peak and then going into bear market, and where we also see the same pattern usually happening in the USA after election, like 1 year of good performing markets, and then things go down. So somewhere in Q3 or Q4, probably more Q4, if I'm honest, if I have to make a bet now, we are probably going to see the markets peaking out, and then things become a little bit more difficult. You'll probably not see a crash on the stock markets. You for sure see a crash in Bitcoin because it likes to exaggerate to the downside. But it all aligns very nice. So this is always something as an investor that I like to look for. This is a pattern, a 4-year pattern that seems to repeat itself over and over and over again. And it aligns very well also with the natural 4-year cycle we see on Bitcoin. And if we look here at the more economy side of things, like what is going on under the hood, because obviously there always needs to be a reason, why things go up or things go down. We can actually see here something that's, in my opinion, very, very alarming. So on the top, you see here the S&P 500, a weekly chart. So this one goes way back to the 80s. And on the bottom here, you see the so-called yield spread. Now, the yield spread is the difference of what the yield you currently, so the return on investment you currently get for a 10-year US Treasury bond. So if you give your money 10 years to the US government, and if you give your money 2 years to the US government. And normally you would think like something like, if you go to your bank and you say like, hey, I want to put my money away for 10 years, you would expect them to give you higher interest rates, obviously, than when you give it to them for 2 years. Makes sense. 10 years, is a longer period of time. It's more risk. You don't know what's going to happen to the bank in the next 10 years. So they have to pay for that risk you are taking in terms of giving you a higher interest rates. But interestingly, this is not what has happened the last 2 years. We've seen actually the yield being higher on the lower maturity bond. So you got a higher yield on the 2-year bond than you got on the 10-year bond. And what is interesting here is that this negative yield curve, this is what it's called, a negative yield curve, is an indicator that is able to forecast a recession. And if we look back in time, I'm only able here on TradingView to look into the 90s, but I've looked at it until I think the 1930s. In 100% of the time, whenever this happens, that we had a negative yield spread, we entered a recession. In 100%, I mean, this is something you rarely see, when you're trading on investment, something that has a 100% chance so far of happening. That doesn't mean that it's happened, that it necessarily needs to happen again. But if I have to bet my money on it, I would, of course, because, the track record of the yield spread is very good. Was the case here under COVID, where we had slightly negative yield spreads. We had a 2-month recession. It was especially the case here during what is called the Great Recession, 2007 until 2009. Remember the banking crisis, maybe some of you that have been around for longer. It was the case before the dot-com bubble, which was the time when I kind of grew up in the market. So I was kind of used to, seeing like falling stock prices. Took me a very long time to get my mind wrapped around, that stock prices actually can go up again. And we had it also prior to the first Gulf War. And for me, this is interesting, especially since I've never seen before in my lifetime something like this, where we had this negative yield spread now for almost 2.5 years. And obviously, I'm asking myself, well, if usually a recession comes, if that happens, I mean, are we going to see like a major recession? Are we going to see something really, really bad happening on the markets? And this also feeds into what I just said about the natural cycle of stocks, of Bitcoin peaking probably somewhere late Q3 or early Q4 and then going down again. And the last puzzle piece for me that kind of makes me worry at the moment is inflation. So if I look at, this is just the year-over-year inflation in the USA, and you guys all remember, we had this peak here in 2024 at around about 9.1%. Then we went down, which for me was the trigger to say like, hey, it's time to invest now in stocks. But somehow, and I heard a lot of economists also talking about this. This one looks eerily like the same pattern we have seen here in the late 60s, early 70s, where we also had like back then, because of the oil prices, inflation going up, then it came down again. And then we had the second peak up to almost 15% in inflation. And who says something like this cannot happen again? I bet when you go shopping at the moment, you can kind of see that as well, that prices seem to go only up, especially for the necessities of life. Like, let's say if I buy a packet of butter, which like 4 years ago was like 99 cents in Germany. Now it's €2.50. And this is also a good price already, the €2.50. So this is a sale price, so to say again. So don't get me wrong. I'm not saying this necessarily has to happen, but I think we need to be a little bit aware of that. So my strategy, as I said just now at the moment, is, get out of risk on assets, not out of all of them. I'm still going to keep some stocks. I'm still going to keep some Bitcoin, obviously. But see like if I can over time, over the couple of the next month, change to having more cash again, or short-term US Treasury bonds, that I then have the ammunition if the market really goes down, maybe for a year, to time my reinvestments into Bitcoin and into the stock markets again. So it's a little bit, it's going to be a complex year. Probably first half, if I have to summarize it, first half or first 8 to 9 months are going to be very positive. And then I hope I'm not right, but I'm kind of afraid that we are going to see, well, at least things getting more difficult. And it's by the way, also something that, like when you go to a bank and you talk to your banking guy, or you talk to the to a hedge fund manager or something, I don't think it's something they see coming up, because most of them are maybe in the early 30s now, and they are used to markets that only go up. I think their first major crash was COVID, which was extremely short-lived as a crash, obviously. But other than that, basically since 2010, the markets have only been going up. So it's going to be difficult for them. As I said, I hope I'm not right. I hope I can look back and say, hey, this was well handled by Jerome Powell of the Fed. This was well handled by Trump. They did the right things, to divert this probable upcoming recessions. But I'm afraid this is not going to be the case, because especially politicians are not good in proactively trying to avoid something like this. They are only good in doing, I don't know, a 10-step plan after things happened, or pointing fingers at other people. Yeah, this in a nutshell is what I'm kind of expecting. Apart from that, obviously, I'm going to concentrate a little bit on more short-term trading this year. Want to get a little bit into more Forex short-term trading, crypto short-term trading. And this is why I always like to follow you, Victor, because you have a way of looking at the markets short term that is like very different from me. So always good to break out of one's comfort zone.
Yes, I thank you for this overview. I think it's very enlightening for a lot of our viewers, because I speak for myself, and I think it applies to many of the people in the audience, where I'm very focused on Forex, right? And less so on the equities, and even less so on the greater economy, on the fundamentals, although I do follow here and there some news and read articles about on it, but it's not something I focus too much time on. And I think it's very important to know what regime are we in, what cycle of the market are we in, what phase of the market are we in? Are we ready to continue higher, or are we roughly at the top? Because that information can be pivotal for your decisions, whether you expand or you become less, you take less, you become less risk, you become more risk averse, your risk appetite. So, but before we go to, you left me with a number of questions. I hope I can remember all of them. But you mentioned something I think is quite informative, or quite useful. You said that the natural cycle of Bitcoin and the rest of the crypto scene, in the extension of that, it's 3 years up and 1 year down. Correct? That's what you roughly.
Yeah.
That is what you roughly see.
That is correct. Sorry, I have to. I'm trading here at the site with my community at the moment, and I just took a take profit in Doge, so I need to inform them. Give me 1 minute. So sorry.
No problem. Take your time.
I wanted actually to close that trade. Yeah, okay. They got
no
it
problem.
already.
Take your time. I think I will just let us know when you are ready. We don't want to be interrupting you, especially if you're putting on the positions or taking off positions.
No, all good. It's done already. So shoot your questions, please.
Oh, all right, no problem. I was gonna divert the conversation, actually talk about something else, and wait for you in a couple of minutes, because I think everyone at home can appreciate. They know that the market doesn't. We don't decide when the market does. Whatever it does. Getting close to the area where we need it. So I think everyone can understand that. We need to be good traders while we do other stuff like stream, etc. Especially if it's live, there's no other way to do it. But no, I have a couple of questions. One is you said 3 up years roughly and 1 down year. That's the natural cycle you have seen of crypto.
Yeah,
what
correct.
year are we in right now?
We are in the 3rd year of a bull market, and I let me just quickly get a graphic for you, which I actually wanted to preload already, but I haven't done this. But just a minute. Oops. So I'm talking about this one here. So Bitcoin returns since 2000 and 2011. And I think this shows why 2011, because prior to this, Bitcoin came into existence in 2009. So 2011 was kind of the first year where you really had a trading on something that you maybe want to call an exchange. Before that, it was like more the typical thing like, hey, I sent you 10,000 Bitcoins, you deliver me a pizza. I think everybody knows that story probably. But what we can see since then is really here, like we have 3 years of positive returns, followed by 1 year of a bear market where prices go down somewhere between 60 and 75%. And obviously, we had a very good 2023. We had a very good 2024 with a performance of 121%. So we should see a good 2025 again. And it's still going to be good, of course, let's say if we reach that upper channel that I was talking about here on the logarithmic regression, which is somewhere here at 200,000 US dollars, probably in August. And then it falls down to 150,000 US dollars by year's end. It's still going to be a positive year. What we cannot expect anymore, in my opinion, at least, is to see something like this here, like 2017 or 2013, or even something like this, 2020, where we had a return on investment of like 1,000+% or 300% or 5,000%. Why? Because we're now talking about an asset that is worth $1 trillion US dollars. And obviously, for market capitalization to go from, let's say, 1 million to 10 million is way easier than going from $1 trillion to 10 trillion, or later on from 10 trillion to 100 trillion. I think Jonathan always calls this decaying alpha. So you are not going to have those pardon my English, batshit crazy returns that people are always looking for in crypto, but more like the returns you see on traditional assets. And I mean, we're talking 2024 about a performance of 120%. I think if you are the average Wall Street guy or hedge fund manager and you can show a return on investment of 120%, people are basically going to throw money at you. So expect that to slow down a little bit. Nonetheless, it's like hard to find an asset that's better performing, in the bull market years than Bitcoin, in my opinion. And this is not even taking into account, all the institutional demand that is coming in through the Bitcoin spot ETFs, through companies possibly taking Bitcoin on their balance sheets, through countries like the USA possibly doing a national reserve in Bitcoin. This is going to add to the demand, but be aware that it's not a one-way highway. So it will eventually also see a bad year again. Maybe that bear market year is going to be something like minus 30, minus 40%. That would be beautiful. But I highly doubt that. I think we're going to see something like minus 50% or so, something like this again.
Actually, I think that spreadsheet already tells the story why it's so compelling and so attractive to have Bitcoin, whether it's a more major portion of your portfolio, or a smaller one. It doesn't matter. But I mean, if I look as a trader, if I look at this sequence where you have 3 up years and 1 down year, I'm already thinking I can exploit this.
Exactly. This is it. If as a trader, short term, and I knew you would react like this when I show this to you. And this is what you're looking for as a trader and investor. You look for repeating patterns. You want to have a high probability that when X happens, Y is going to happen. And when it comes to long-term investing, this is, in my opinion, one of the most compelling patterns I've ever seen in my life. And I don't see why. It's probably in the future somewhere going to change. Like all patterns tend to break sooner or later, but I don't see why it should change now. And if I have to make a bet, I don't bet on the crash. I bet on the pattern repeating itself, which means like after I scaled out this year, latest end of 2026, I should reinvest in Bitcoin again.
Now, that brings us to the next question, because you said you already started scaling out.
Yes.
However, I see the sequence that we are on this. The last year was the second year, so this year should also still be an up year.
Yeah.
And are you still thinking that this year will be an up year?
I still think that this year is going to be an up year. But as I said, I don't think we're going to see like 1,000%. And I mean, you have to be like a little bit modest and realistic when it comes to things like this. Like I said, we are looking here at returns of Bitcoins I bought between 16,500 and 30,000 US dollars per Bitcoin. And that I started selling at 93,000 US dollars slowly now. I mean, price obviously is higher. You're not going to catch the absolute top. You're also not going to catch the absolute bottom. What you want is to be able to capitalize on a large portion of a trend. If you can capitalize on 50, 60, 70% of a trend, you know, you are very well off already again. And this is this is probably what you do, you know, on the very short term Forex time frames as well, you know, that you are happy when you can capitalize on a part of a trend, but you're probably also not looking on, or not aiming on, I need to buy at the very bottom and I need to sell at the very top again, or vice versa if you're going short. This is not going to happen. As I said, like there's always to a certain degree of uncertainty when it comes to long-term forecasting. And the way I see it is we are living at the moment in times where we have not only the war here in Europe between Russia and the Ukraine that could be escalating, you know, at any minute. We have like other potential wars also that could be breaking out any day, really. I mean, we don't know what's going on there behind the curtains on a political level. So it would be devastating for myself, and it would be really dumb. Let me really put it like this. If I let slip away a return on investment of 300, 400%, just because I'm arrogant and think like, no, I'm going to be right. The top is going to be in August or whenever. And this is why I slowly scale out. I'm not saying like, oh, you need to sell everything right now. Sell everything every month, maybe a little bit, and take your profits out. This is the same tactic you do when you invest in Bitcoin. You also don't say like, this is the bottom, I'm going to buy now. You are slowly scaling into the market. That's why I bought at 30, 25, 20, and 16,500. Because I also didn't know when was the bottom going to be. In a hindsight, it's always easy, you know, to look at a chart and say like, well, that was the top, this was the bottom. But when you want to make the decision, it's difficult.
I understand that completely. So basically what you're saying is, even though you have a clear sequence, a clear pattern, you still have to take on a margin of safety or margin for error, because it may not be as specific this year around, and manage your expectations, right? What are you getting into what is reasonable to expect? And you're already above of what what most investment, actually every investment you can get, which is, you said 3 times what you invested, you already have roughly. I mean,
which is crazy, no? For 2 years.
It is. It's completely crazy. In anyone's. Go ahead.
Yeah, it's completely crazy, and it's a pattern that if the cycle doesn't break and we see a bad year this year in the crypto markets, like I said, I don't expect that. Then it's a cycle you can repeat again, because you know that there's a high likelihood that we're going to see a bear market next year, so you want to get ready to buy when nobody else wants to buy, as a matter of fact. I still remember, ask Jonathan about it. We did like live streams there in 2022 when FTX collapsed, and both of us said, well, actually, this is the time now to buy. And nobody wanted to do that. People said like, no, it's going down to 12,000, it's going down to 10,000. And Jonathan said, and I agree with him there, well, who cares if it does, you know? And in hindsight, this is still going to be a great time to buy if we are talking about prices north of 100,000 US dollars in 2 years for Bitcoin. And he was right about that. Perfect.
Yeah, completely. It's the thing is, we need to have an idea of what is the long term and what is happening right now. How does it fit with the long term vision? If we have a market that is going up, and we expect that to happen with Bitcoin, for the crypto space to keep on growing, they're getting established and recognized as a mature asset. Yep. I mean, you have the pension fund still, the National Reserve possibly, and the what's the name of that company that put it already on the balance sheet?
Oh, MicroStrategy.
Yeah, MicroStrategy. That's
Michael Saylor.
the only one,
they are
right?
insane, no? They are basically putting everything they have into Bitcoin. The company, by the way, is not having positive revenue. But if you give me the choice, I would rather invest directly in spot Bitcoin than in MicroStrategy. It acts a little bit like Bitcoin on drugs.
I see, but they're not going to be the only one, and perhaps they're not the only one already that is considering Microsoft. Microsoft, if I'm not mistaken, didn't approve the proposal to put it on their balance sheet.
That
but
was very
probably,
interesting, no? Like they did, like the shareholders were able to vote about this, and I think only what was it, like 5 or 6% of the shareholders wanted Microsoft to put Bitcoin on their balance sheet. So by that you can see, like, you know, that it's still not something that has reached like the majority even of people who are investing in risk-on assets.
Yep, sophisticated investors. These are not mom and pops. These are bigger investors who, you know, have voting rights and are exercising their voting rights in a big company as Microsoft. And that tells you already also that we're not there at that top of mass adoption the year. We're getting there. We are starting, but we're not. We still have a lot of room to grow in that sense. Now, the question that I was going to go to is, now we have the sequence, and you start offloading in the third year. Basically, I think that's roughly your strategy.
Exactly.
You have the third year, you know, it's going to be an up year, but you don't want to be selling after the crash that comes on the fourth year. And, you know, maybe it's going to happen at the end of the third year, and you don't want to be in that position. So you want to start selling on the third year. And actually, you're doing it early on already. Does it mean that you're going to be selling? You spread out your scaling out process for the rest of the year? Are you going to be selling like 10% of your portfolio in Bitcoin for the next 10 months, or how should we think about it?
I'm not scaling that evenly over the month. So right now I'm selling a lesser percentage. I think it was like 5% roundabout that I sold it. As the month progresses, I'm going to up that. So end of January might be something like 7 or 8%. Then the next month maybe 12 or 15%. So the closer we get to the mid of a year or Q3, the higher the percentage is going to be. I'm planning probably somewhere around August, September to be done with this. Because I'm not sure, you know, is the peak going to be late of April already, or is it really going to be in late of October? So I kind of chose the middle between those.
I understand. And did we understand correctly that you're gonna phase out completely? Like, is that your position? Completely?
Yeah, no, I have like, you know, I have like one Bitcoin that I always call my retirement Bitcoin, that I'm just hodling, you know, no matter what happens on the markets. But for the rest of it, also for stocks, I'm going to phase completely out. Yes.
Wow, nice. That's some powerful information right there, Dirk. All right. So, and what about the people who are, you know, Bitcoin is perhaps many people have Bitcoins in their portfolio or their investment account. What about altcoins? How, if we're having not the the bigger ones, you have other, you know, like Solana or some other established, but still not the bigger ones. How should they interpret? Does the same natural cycle happen in the altcoins as well, or is this something different? Is it more pronounced? Is it less? Is it maybe a little bit delayed? Are there any patterns visible when you consider altcoins?
Yeah, there are, of course. Let me quickly open another one here. No, I cannot open that anymore. I canceled my subscription to that. There's something called a so-called altcoin season index by a website called Into the Cryptoverse, which basically just looks at how did Bitcoin perform over the last 60 or 90 days. Did it outperform the top 50 altcoins according to market capitalization? Minus the stable coins, those are taken out of the equation. And according to this, we just had an altcoin season, actually. We had the majority of altcoins in the top 50 performing better than Bitcoin. And whenever that happens, it's just a matter of time until Bitcoin starts performing better again. Usually what we see in the late cycle of a crypto bull market, that the altcoins tend to outperform because so many people are kind of late to the game. And that was the case, for example, for me during my first bull market phase, which was 2017. When Bitcoin was sitting like at $5,000, I also thought like, this is so expensive already. I should look like for an altcoin gem. So I bought an altcoin called Electronium for, I think, like $30,000. I bought it back then, which tripled, and then it went down, and I finally sold it, I think, and converted it back to Bitcoin when I was sitting on like 90% losses then. But this is what I mean by this is driving the late stage of the craze. People are looking, they think they missed the train on Bitcoin, so they are looking at altcoins, especially lower market cap altcoins. Meme coins, for example, seem to be the vehicle for that. This cycle, last cycle, it was NFTs. The cycle before that, it was ICOs. And because they think like, hey, if I'm lucky, I'm going to make my 10x there, because at this stage of this bull market, it's not possible in Bitcoin anymore. And again, they are going to either be, what is that called? Rug pulled, I think.
Yes.
Or they are going to miss selling at the top again. And then the next cycle, they're coming back and say, like, oh, I learned my lesson. Maybe I should just buy Bitcoin, Ethereum. You mentioned Solana. I think Solana is really something special. Because we see like most of the new coins, like almost all of the meme coins, for example, they are put on the Solana blockchain because it's easier and especially it's cheaper to mint them there. Ethereum is very, very expensive. You have to pay a lot of money if you want to transact there something, or if you want to mint a coin. And funny enough, I just had a couple of weeks ago, I was talking to somebody that I do a German podcast about trading and technology every week, and he said, well, I'm talking to somebody here who has a virtual Ethereum machine on Solana. So you can take your code on Ethereum that you coded, your smart contracts, and just convert them to Solana and run them there without needing to code anything, which is awesome, And that's why I think, and if Alex is still looking, he will like me hearing saying that probably, that maybe Solana is going to become the new Ethereum. If I have to make a bet, if you point a pistol at my chest and say, like, you have to buy either Ethereum or Solana now, I would probably buy Solana. But Bitcoin is always going to be the coin, the investment that everybody should have who is in crypto, because what makes Bitcoin worth money, in my opinion, is the decentralized network. We're talking about a network of a size that is impossible to crack. Like, it's like financially not doable for any country anymore to try to take over the network to do a 51% attack, because you would need trillions of US dollars to do that every day or every month with an uncertain outcome. So why should anybody do that? This is why Bitcoin is worth something. So if anybody asks you, well, it's not worth anything, it's not backed by anything, it is backed by anything. It's backed by decentralization. We've never had a decentralized network in the world like this, where nobody can crack it, nobody can take it over, at least within reasonable economic terms. This is what makes Bitcoin worth $100,000, if you ask me. And this is nothing any altcoin out there will ever achieve again.
I understand that. I didn't think about that. By the way, Dirk, what you said about that 51%, that it has reached and surpassed a certain critical level where no sovereign state can anymore reasonably take it over and control it. So I didn't consider that. That's because I'm not a crypto person per se. But no, great stuff, Dirk. So let's see on my so what is the pattern between Bitcoin and altcoins? What can we say? You mentioned that it has like a delayed move, right? After Bitcoin,
Yeah,
it it
a bit like it's like what I usually see. I'm not a great altcoins guys. I do trade altcoins like short term, like you might have just seen on those charts here. So I not only have Bitcoin here, I have Doge, ADA, I have Popcat, which is like a meme coin. But I trade those because of liquidity reasons, because they have a good liquidity, and a good liquidity, guys know that from Forex means that I have a good spread when I'm trading them, that I'm basically not going to get ripped off, or that I have a broker, stop hunting me or something like this.
Mhm.
Or magically overnight, suddenly the spread goes to 100 pips if we're trading Forex. But when it comes to investing on Bitcoin, I mean, I have to stick to the facts. And I don't, and since I think the selling point, the major selling point for crypto is decentralization, I only can look at Bitcoin long term. I had a couple of so-called AI coins, but which I sold last year already. No, in early 2024, I sold them just because I forgot about them. Long term, I would never invest in altcoins. And I mean, I understand that it's like something people are drawn to.
Mhm.
It's this because it has a lot of characteristics of gambling. They are looking for this. I'm late for the show. I want this 10x return. I want this 100x return. And I mean, media is full of those stories. No, I remember media reporting about, hey, there's this one wallet that bought $500 worth of Shiba Inu, which is now worth 500 million US dollars. So of course, everybody is dreaming about achieving something like this. But I
Mhm.
mean, let's be realistic. This is not going to happen. First of all, if you happen to invest in this altcoin that is going up by a million X or whatever, I can guarantee you that you're not going to ride it out fully. You're probably going to sell if you have like tripled or 10x your money already. So you're not going to become a multimillionaire. And it's very unlikely. I yet have to meet somebody who actually managed to pull that off. I haven't. I mean, I know some people who got rich with altcoins, but they were sitting on the other side. So they created an altcoin, a meme coin. They spent money on marketing, and then they rug pulled the investors, which obviously is something I never would consider doing, because I think, especially as traders, you have to have like a moral compass also. But when it comes to investing, I don't know anybody who got rich from investing in altcoins, honestly speaking, with the exception of Ethereum, with the exception of Solana.
I understand that. We have someone in the audience who mentioned something quite interesting. He said, "Well, except if Bitcoin turns to be forbidden," and
Mm.
that brings me to the next question: what is the risk of regulation? How is that currently? How is the regulatory risk for Bitcoin and crypto in general?
Well, if you like, it's a good question. Like for me, living in Germany, for example, or in Europe in general, we have something that came into effect now, beginning of 2025, called MiCA, which means like when you are trading at a crypto exchange, you have to prove to them that the wallet you are sending your money from is really your wallet. Obviously, they want to get a hold of money laundering, which, I mean, we
Mhm.
cannot deny that this is something that is going on in crypto, but this is also something
Yes.
that is going on with fiat money, like tenfold of what is going on with crypto. And if your government wants to make it very difficult for you to own Bitcoin, we see that in China, for example, they forbid Bitcoin, they forbid crypto, and it's of course going to become difficult. But at this stage, it doesn't really matter anymore, because it's just enough if there is one country in the world that says, we're not going to forbid this. We are going to welcome Bitcoin investors. Like El Salvador, is always, of course, the example that comes to your mind. But also countries like Singapore, for example, which, of course, is like a major economy in the world, and if they are embracing Bitcoin, you will always have a place to go. I think it's impossible that every country on this world will agree on, we are going to ban Bitcoin now, because some countries will seize the opportunity and say like, hey, there's a lot of money to be made, so we want those people to come to our country and invest their money here. And sadly, Europe is always a bit backwards when it comes to that. A friend of mine always said, like, Europe is always a bit like they don't embrace innovation. They want to be the best in regulating things, which is somehow like when you say, like, I don't want to be the one manufacturing cars, but I'm going to be the best one in manufacturing stop signs or traffic signs in general. This is sadly what's going on here. So if you look in, I mean, you just need to look into the USA. Of course, you have the discussions that are also always about banning Bitcoin, but they are never going to go that way because their mindset, the average American mindset, is more business driven than the average German mindset. So where they see the opportunity, the average German person would see the danger. Like, you have had very rarely here, for example, in Germany, that my generation or the generation that came before me have like a business mindset where they say, like, hey, I need to put my money to work. You know, I cannot just have it lie around in a saving account at a bank. And it shows, you know, it sadly shows. So long answer, sorry, I'm monologuing here a lot now. If Bitcoin gets forbidden, and that's the beauty of it, you know, you can send it always to a country or a wallet that's outside of the regulation of the country you're living in. I'm not saying do that, you know, I'm not saying do something criminal, but who's going to stop you? No, nobody can. And that's the beauty of thank you. Nobody's going to stop me when I decide now I want to send Victor. I don't know where you're living, Victor, but I want to send you now a Bitcoin. No country in this world, no government can stop me from doing that. And that's a big relief. And this is especially big relief if you have lived through the financial crisis. Because maybe some of our viewers are, for example, coming from Greece or Cyprus. I remember, I think it was in 2009, there the government confiscated all money over 100,000 US dollars or euros people had on their bank accounts. And imagine, like, you worked your butt off for all of your life. Maybe you have like 500,000 or 600,000 in savings. Say, like, hey, I somewhat can now have a nice evening of my life. And then the governments, because they screwed up, come like and say, like, hey, no, you're only keeping 100K. The rest of the money, the 400K, we are going to take.
That's the power of decentralization, right? That's the power where no single sovereign state can confiscate or solely regulate something, because that asset, because it is decentralized. It's not centralized. There's no central bank controlling, pulling the levers with their policies. There's no policy to be made, right? It's decentralized, as the word says.
Absolutely.
You mentioned I think we are slightly probably, I don't know, maybe you tell us, but we are, instead of having the position where someone doesn't dare to stop Bitcoin because it's other countries will go not exploit, but benefit from what is inevitable. Instead of that, I think we are getting near, or are we already in that phase where every country is feeling FOMO, basically, or they will soon feel the FOMO of they need to do something with Bitcoin, right? Because otherwise they're going to be left behind. Either their economies are going to be left behind because other economies are maybe incorporating Bitcoin or blockchain or whatever innovation that this technology brings to us, and especially if we're considering national reserve policy, if the U.S. takes on that position to have 1% of whatever of their national reserve in Bitcoin, every other sovereign state will have that pressure, that FOMO kind of feeling that they don't want to be left behind. Are we already in that phase? Do you think sovereign states are already feeling that FOMO coming up, or not yet?
Not really. And I can, if I have to quote somebody here, I would quote Jerome Powell, who was asked exactly this question. When is the Fed going to take Bitcoin on its balance sheet? And the only sentence he had to say is, like, the Fed is not allowed to do that. We are never going to take Bitcoin onto our balance sheet. And
Sorry, did he mention the second sentence as well?
I think he didn't. He just said we are not allowed to do that. So good that you
but no,
question
but
that.
because I didn't listen. I'm not correcting you, but I think didn't he maybe hint that they're not able to do that, they're not
Yeah,
allowed to do it,
they're not allowed to
but
do that. Yeah.
maybe if they would be allowed, maybe they would do it. Maybe that's in between the lines given out, or am I reading
but
all much into it?
the question is, of course, what has to change that they are allowed to do that? And this is honestly, I don't know. I don't even know like what laws are governing a central bank because they are a self-governing body normally. So I don't know. I also am still a little bit critical. I think despite what Donald Trump has promised, and the United States is, of course, something different from the United States Central Bank. So if the United States decides we want Bitcoin on our national reserve, it's something else than the US Central Bank. They are independent bodies. That's always important to remember. And the president, of course, cannot decide by himself, probably, I want Bitcoin on my national reserve because good Bitcoin is great. Like Alex just said here as well. And so I think it's still going to take a while until this really happens in major first world countries, like the major economies of this world, because there are going to be a lot of people involved. There's a lot of jurisdictional and lawmaking probably involved into that. We just had this case in Germany as well, where Germany a couple of months ago, they seized 50,000 Bitcoins, I think it was, from some criminal activity. And what did Germany do? They sold them all at, I think it was like 53,000 US dollars. And now everybody's laughing at Germany because they missed out on billions and billions of potential profits. And they did sell them because the law says in Germany, if you seize assets that are volatile from criminal activity, you have to liquidate those assets to ensure that the money is still there when you want to compensate victims later. And this is kind of the mindset we are dealing with. It's difficult to change the law. It's going to take some time. It's also going to reverse, in my opinion, at least for a while, because imagine if everything that I said in the beginning of the stream becomes true, that we are going to see a bear market in 2026 again. Well, then we have all those investors who invested in the Bitcoin spot ETFs that are probably going to at least partially withdraw the money again. So what we have as a demand pressure at the moment, we're going to see as supply pressure then, which could lead to a really major bear market. And for sure, then on a government level, you'll have people coming out say like, hey, see, this stuff is so volatile. We should never put this on our national reserve because we don't know what it's going to be worth next time. So I think this is probably going to be in a theme for the next bull cycle. So we're talking about 2027, 8, and 2029, or maybe even the cycle after that.
Good stuff. Good stuff there. Everything, every time you explain something, I have at least one, maybe two new questions coming up.
That's
and
good.
I lost track of the ones that are left behind. But I know we have you and your remarkable insight on crypto for just 1 hour today. So I have one last question.
I think people are also already nosy about what you're doing in euro dollar at the moment. I am
Yes,
as well.
and yes. After in the second hour, we will go through the market. I'll do a overview of a few assets, and we'll go into the opportunities that I see. I don't have anything open right now, at least not in my main strategy, but I do see something, and that's why I'm looking at one side sometimes. I do see something that might be coming up that we could talk about. Yes, that last question, Dirk. If someone, who is not as close to crypto news and trends and who may or may not have the time or maybe even the interest to be, be investing time into the crypto space, to really time the market, as you are saying, with the 3 up 1 down year, etc. And they see the crypto space, they see as a huge opportunity, as we see here, because just by seeing this as a trader, you can see that you have more up years than down years. The
Mm.
up years are way above 200%, while the down years, well, one is around 6, almost 60, 70. Those are pretty bad losses to have if you have them on your in your portfolio. But you can already see that the up years, they far outperform and compensate for even those huge losses during those down years. And someone says, well, I don't know too much about Bitcoin or the crypto space, and perhaps in the future they will, but um, and they want to just ride the wave, the macro wave, that in 5 years from now, it is highly likely that we're only going to be higher.
Yeah.
Doesn't matter if it's crypto, if it's altcoins, it doesn't really matter. This is growing. We're only in the early phases of its growth. In 5 years, and for sure in 10 years, we're going to be higher. Um, does it make sense? Do you think, for the audience, does it make sense to have such a view and say, just buy and hold for a good number of years, and don't try to time it, and just forget
Mm.
about it, and look at it again in 5, 8, 10, or maybe even 15 years, and then sell it? Does that make sense to you?
It makes sense, although I wouldn't recommend it, honestly speaking, because it's very hard on your psyche. Let's say, let's just pretend, this is the top right now for whatever reason, and you bought at right now 100,000 US dollars, 101,000 US dollars. This is where the price is at the moment. And tomorrow starts the bear market. So we see prices declining by 60 or 70%. So price goes down to 40, 35, or 45,000 US dollars again. It's going to be, especially if you're not experienced and have lived through this already, it's going to be very hard on you. That's a high likelihood that eventually you are going to take your loss because you're just sick of looking at it. Like buying something and then not looking at it for 5 or 10 years, I think that's impossible. Nobody's going to do that nowadays anymore. If you have the information here on your mobile phone, just one click away at any time of the day. What I would do is now, if you're absolutely not invested in crypto at the moment, you think of, I should, long term get into Bitcoin slowly, buy a little bit every month or every week, whenever you have some spare money over that maybe you normally would put on your bank account, your saving account, or I don't know, some other kind of low interest investment vehicle, buy a little bit of Bitcoin instead. Actually, the best thing that can happen to you then is if you start doing this when a bear market begins, because then you have all those nice prices, low prices that you're buying for that are going to compound majorly, when the next bull market hits in. Do that. And I think in 10 years, you are going to look back and say like, well, I'm happy I did this. This paid off majorly for me. I have a very good retirement fund now, probably even depending on what you invest, of course, life-changing money.
Thank you. So you say the answer is to dollar cost average into this volatile market, so you don't have it too hard on your mind, on your psyche, as you call it. Great advice, Dirk. I know we're not, these are not financial advice. We have to say
please,
this.
guys.
This is not something you need to act upon it necessarily. These are opinions, no financial advice. But thank you for those good words, Dirk.
My pleasure. My pleasure.
I would like to thank you for. I mean, every time you come on, I'm a trader, and many people who know me already know this. I'm not too big, as in I don't know that much on the crypto space. Of course, I'm participating, I'm trading it, I'm holding it, but I always, I'm confronted with the fact that I don't know many things about crypto. And I'm always very grateful for when you're on, because you bring that those insights, those knowledge that I think people can use to their benefit for their profits, for their portfolio. Thank you for that.
Well, thank you for your kind words, and you guys out there, thank you for listening to me. As always, it was a pleasure being with you today. And yeah, what can I say? Of course, I hope that I'm wrong about the economic perspective that I was talking about this year, and that we are now always up market. But having been on the markets for 25 years, not only crypto, obviously, I see patterns that like to repeat itself. And I'm going to probably be on more often now again. Maybe we can dive a little bit more into actual crypto trading then as well, if you guys like that. And now I'm going to leave you in the competent hands of Victor to talk a bit about euro dollar and order blocks, probably.
Thank you, Dirk, for that. Yes, we will have you on more often. So it will be to the delight of the people in our audience. So thank you, Dirk, and see you soon again.
See you again soon, guys. Bye-bye.
Bye-bye. All right. So yes, here we are. We are going to be. Let me change this a little bit. Yeah. So this is the. I have seen as we were. Actually, guys, if you like this, if you like the information that people like Dirk and others that we bring to the show bring to you, right? They share to us these kind of patterns, actionable insights. If you like that, hit the like button, subscribe to our channel, make it possible, support this channel that we can continue to bring value to you. And grow as a channel to keep on doing that. That's our goal. So if you like what you're seeing, hit the like button. I would say do us a favor, but it's actually also in your interest because of course the better we become, the more value you get from our shows. All right, so I have seen a couple of Vinicius asking here, are we going to parity or not? That's a good question. I would, it's always difficult to say, yes, I understand it's on euro dollar for those who are not familiar with that question, but I automatically saw that what you meant, which is the euro dollar. I would say, let's look at the chart. Let's the market tell us if that's going to happen or not. But I think the charts are telling us that they will. I'm not sure when, but they will. And I'll tell you why in a short while. But before we do so, let's look at the market. Let's look at what you're asking, Vinicius, is something that I think we need to consider on the macro or super macro timeframes. And we will dive into that in a short while to understand, not only understand, but to be able to substantiate that statement with price action, with actual data from the market. And before we do so, I'm going to put on some background music. So if it's too loud, let me know. But I think it's an addition, a welcome addition to have a little bit of background music. All right, so there we go. Before we go to that statement, whether or not the EU will go to parity with the US dollar, let's look at the market. Let's look at what we have today. So before we do so, let's check the calendar, the economic calendar, for what we can expect for today. And here we are. This is for the traders who are trading today. We have, of course, dollar news in about 1 hour from now, actually 50 minutes. This is UTC +1. We have and the JOLTS job opening, right? Those numbers, that's quite important because they give, of course, a glimpse at how the labor market is going, is faring in the U.S. market. So these are important numbers. It will be at the close of our stream, but these are things or the events you need to be watching if you are especially trading a prop firm account that has some news restrictions, like the high stake accounts at the 5ers, right? So 2 minutes before, 2 minutes after, no opening of trades, even pending orders cannot be activated. So that's relevant. Other than that, let's look at the actual market. Let's start on the weekly time frame. All right, there is a good question right there. I will get to that as well soon. Someone asking about the quasi at the crude spot that is oil, of course. All right, so on the monthly time frame, there isn't a lot to tell us, right? There is bigger market structures at hand, but we'll talk more about them when we go to that, and higher time frame to look if we're going to parity or not. What we can say is that on the monthly time frame, based on the local price action, right, the recent price action and other structures, there isn't really a lot of information other than we are, in a consecutive bearish bars, but that doesn't really tell us much. There are no order blocks and no quasi formed on the monthly time frame, so there isn't really much to say. On the weekly time frame, however, we do have a quasi at hand, quasi being a reversal pattern, and it is on the weekly time frame, so it is something that's going to take a long time before it actually does anything. But we already have a couple of weeks ago, we have tapped into one of the two entry order blocks for a possible reversal on the weekly time frame, right? So that was this one. Let me get this a little bit bigger because it may be too small for some viewers at home. This is EU. This is the weekly time frame. So we have the quasi, and the question is this going to be the entry order block is the market going to use this entry order block? It's an opportunity for the market to reverse from. Doesn't mean it's going to happen per se, but if it's going to reverse, these are the two likely areas that is going to use to make that reversal. So, and we are already in one of them, and the structure, the break of structure for this on the weekly time frame is all the way up here. So there's a lot of space still on the weekly before it confirms that we have break of structure. We are in that weekly time frame, or entry order block, I should say, and there is something we talked about this yesterday. Yes, I do see on the lower time frame that we have had a very nice correction, a V-shaped correction from the lowest point we reached, which was on the 2nd of January. However, I said this as well, the pivotal moment or the pivotal level for us to know if we have a possible reversal at hand is if the market is able to break these structures we have here. I'm indicating with the yellow arrow. Why is that? Well, because on the daily, for example, that's let alone the weekly. The weekly is much higher, but the daily neckline, this is the daily neckline to be broken, right? So this has to be taken out, even with the price. Doesn't have to be a close. Just with price, with a wick is enough. It hasn't happened yet. It may happen as price is very bullish and momentum to the upside, but it hasn't happened yet. And we need to wait for the market to tell us what it wants to do by either breaking or not these kind of structures. So the jury is still out there if this is going to be the area where we reverse from. Let's go to a little bit deeper. We have a fresh order block on the daily time frame there from that is also already at play, right? We have 1, 2, 3, 4, and it's already touched with its wick, right? So it's already at play. You can stop counting. It doesn't matter anymore. It's already reached it back in a very swift way, right? So you can start looking for reversal patterns on the lower time frame for a possible short from this structure, but only this structure. As soon as it is outside, meaning higher than these structures, the sell is off the table, right? Because this is the area where the sellers came into the market last time around, which was on the 30th of December. And the idea is, of course, that they are going to be defending this bearish structure again. And if they do, then of course it's going to happen after this structure is tapped into, and it's already been tapped into. So that's one thing. But the question then is, can we see this? Can we see any indication of this on the lower time frame? Let's dig deeper to see if that's the case. Do we have any signs yet? Let's go to the 4 hour, and we do have a reversal pattern, right? Which is not a huge reversal pattern, but it is present and it is valid, which is an established uptrend, the break of the neckline, and it comes back to a relevant area, which is this area, right? It comes back, and guess what? That's exactly where the market is having difficulties to continue higher. It doesn't mean it's going to reverse and go lower, but look at this. That's what the market does when it gets to a relevant area, right? It's not coincidence that right there, it's where it turns around and reacts from, right? To me, it's very bullish still, because as you can see, look at this. The market shoots up, reacts to that order block, that fresh order block within the daily. It's an H4 order block in this case, and it goes back to react to anything bullish. And the first thing it has is the H1 order block. The fact that it's a lower time frame, right? In this macro, it's an H1, which isn't, compared to the H4 and D1, the H1 isn't like very authoritative, right? They get taken out very often, but it was enough. That tells you something about the bullishness of the market, the order flow, because it didn't need a lot to come back, right? Let's go to lower time frames so I can show you what I mean. We have this impulsive move, right, into that area where we expect, this is the supply area, so we expect from this point on the market to either switch completely and reverse, or at least have a reaction to. And we did have the reaction, and it goes back just in one bar, reacts to the first and the only structure it needs was this one, which is the H1 order block, to then react and continue on that upwards move. This to me is still very bullish. There hasn't been broken any structure as it is going into this supply area. That's very important. This tells us something. So to answer the question I just made, I ask myself, do we have reversal patterns on the lower time frames? At least on the 1 hour, we don't see anything. Do we see anything on the 4 hour? Do we have a engulfing here? Let's check. Right, the creation of bullish and bearish structures is what is one of the ways of the market to tell us its intention. So if we put the cursor on this candle, what's the open? Right, the open is 03.96.8, and what's the close on the next one? It's 03.96.6. Right, so technically we do have a bearish engulfing. However, it is a borderline order block, but it is an order block to me nonetheless. So we do have perhaps the first sign of a bearish structure coming in, being created at a H4, right, in relevant time frame for the market after the daily, right? We were at the daily, and we were going to be looking at the next relevant time frame to look for reversal signs, right? And if we do that on the H4, we do have one H4 order block bearish being created. Will this be enough for the market to do, to complete the reversal? It's too early to say anything, but it is starting to do what it's supposed to be doing if it's going to go lower. On the lower time frames, however, we don't have where, if we are going to go lower, right? Let's say on the H4, if this is going to be the beginning of a move lower, much lower than it was before, and maybe even lower, who knows, right? If it's going to do that, we should see some sign of reversal patterns like quasis on the lower time frame in here. Let me show this. Either using these tops, and that's not the case yet, right? So even though we have a fresh H4 order block being created, it's only the first one, and it's the only sign the market has given us that a possible reversal might be at hand. We don't have follow through, or we don't have more confluence in that possible reversal, because let's see, where is the neckline? In this case, on the H1, the neckline would be here, and actually not even, because this is this would be that's the highest point, right? You see that? So that makes, although there is we can, we do have an established uptrend here, so it would be valid to start and say the neckline is here. Where the H1 quasi is, right? The neckline. But the thing is, this is not the highest point, right? So this is an inner structure, right? The more relevant structure is, of course, from this high. If you look for a reversal from that high, even on the 1 hour, which is not a very high time frame, the quasi neckline is way below us. So basically, it has a lot of room still to do all kinds of price action exploration without breaking any structural line limits where it's still able to go higher. So it can do all kinds of movement, right? Since it's not breaking that line before it continue without making any damage on market structure before it continues. And so far, the evidence or the signs that the market has given us are very slim for a reaction of this daily order block still. So I would say that the momentum or the bias is still to the upside. From this low, it looks like the market is not ready to continue on a downward path. So I think that's the market overview for EU, right? Because this is the question. This is the structure that needs to be taken out, and especially on the H4, I want to see what the behavior of price action is when we get there, right? When we get to and we already got there, is the market going to show us the quasis on the H1 and the H4, H2, etc.? And it's not doing that. We did get a H4 fresh order block, but it's a borderline, so it's not very confirming much, right? It's kind of weak, I would say, although it is, and I would still trade it because if it is, then I'm supposed to be trading. If it is an order block and it fits the rest of the my trade plan, then I'm going to be trading it, no matter if it's a bigger one or not so convincing order block. So I think so far it looks like the market still needs to explore and tell us if it's going to reverse from this. We don't have enough data yet. It looks, so far, it's still bullish, and it looks like it's going to continue to be so. Look at it, the low and the lowest point we have had so far. It's too early to say if we don't have enough information, I think, yet. Maybe later today, maybe tomorrow. Actually, I think we need a lot more time, and we do have quite some news for this week. Tomorrow we have ADP non-farm employment change, and we have NFP on Friday. So probably by the end of Friday we would have we would have answered that question. I mean, if this structure is going to be holding or not. Maybe by then it's already blown out, could be, but if but before that, we probably will be consolidating, going sideways as we go into that news. Now let's look at another market. Actually, let's go to the macro move, the macro time frame to answer if you're going to parity or not. Right? This is doesn't have a lot of data, historical data, but it doesn't really matter because parity is, of course, here roughly, right? When we see this, I think, based on this, is to answer the question, right, from Vinicius, if we're going to parity or not. It is pretty. This is the yearly time frame, so it's difficult to know in which bar it's going to be hitting that low, but it's pretty obvious to me that it is well within reach, right? I don't know if it's going to happen this year or when it's going to happen, but it looks to me the market, because of these structures, right? We just formed a fresh order block on the yearly, right? We talked about this a little bit. Perhaps I should give the narrative of this move. We have the impulses are to the downside, right? From this high we had from this point, basically, right? The movements are more to the down, bigger to the downside than they are to the upside. If we look, perhaps we see this, and we can understand what I mean, right? This is basically the movement that is being made on the market. And if you do that, you kind of see that the movements to the downside are much pronounced. Maybe I should not use arrows, but the other tool to make it more visually obvious what I mean. Right. Actually, I think this is perhaps the better pivot points in the market, since we only have one bar from this high, one down bar. I like to use the pivots which has both on both sides at least two bars to consider it a pivot. But it doesn't really matter. You come to the same conclusion, where we're in a bear market structure on the yearly time frame. And do we have indication that that's going to change? Do we have anything in the market telling us that bearish market structure on the yearly time frame has changed or is in the process of being changed? We have a bullish structure being created, and we have another one, right? Price went from, let me take this out. Price went from creating that bullish order block, comes back to that fresh order block as it usually does, and reacts favorably, right? It's being bought, but we did not get any follow through. Instead, we found prices going much lower, squeezing that yearly order block, meaning that yearly order block or that bullish order block is weak. This is the structure that's supposed to hold and make price bounce. But is it doing it? Is it being effective as a demand area? And it's not. We can see by the wick. That's the first indication. The wick has gone so far down, meaning the order block was not able to hold it effectively. And what is price action telling us in the last couple of bars? Bearish structure being created, meaning this order block being created. Where is it being created? Where it's supposed to be getting demand. It's not getting demand. It's getting, this is a bearish sign. So where the buyers are supposed to be coming in, the opposite is happening. The sellers are coming in, right? So to me, when you consider that, and you consider that parity is only 300 pips away, maybe for almost 400 now, it's very conceivable that at some in the future, right, the near future, whether it's going to be this year or the next or maybe the next one, it's quite conceivable that we're going to hit parity in soon, in yearly time frame, I mean. So to answer your question, Vinicius, yes, I think we are going to go to parity. Just not sure yet how fast we're going to get there. All right, so let's look at the chat to see if we have any other questions. Don't forget, guys, hit the like button if you think we are bringing value to you. If you want to see us, adding more guests, adding more experts with traders with good amount of experience for your benefit. If you want to see that keep on happening and expanding, and we are expanding, then hit that like button, because it will allow us. It will be the impulse we need to keep on growing, as we're already growing, but we'll keep on growing even more with your support. All right, so let's see. We have All right, let's look at gold. I think gold is a very popular asset for many traders. So let's look at the monthly time frame. I'm not going to spend as much time in gold as I did on EU, because simply I think it's something much more clear. On the monthly time frame, of course, it's very bullish. It's predominantly the buyers are in control, even when after making this all-time high, new all-time high, right? It wasn't able to create a bearish structure. That tells you that even after having such a run, the buyers are still well in control. They have their grip on this asset still. So it's very bullish. What else can we see? Well, we have actually, let me go to another price feed, because I think this is not the price feed I used yesterday. There you go. That's the one. We have a weekly time frame which was fresh when we came back into it. Actually, it was an immediate retest. And we talked about this yesterday, how the market is probably going to come back to this new fresh order block within a fresh order block on the weekly time frame for a possible move to the upside. We talked about this yesterday, and this is yesterday's candle that we talked about. This is the daily time frame, and that move that we saw from that wick and today up is exactly what we were referring to. The price created and told us price made this movement, right, which created that daily order block, right? And how does price move when we have order blocks being created? A lot of the times, not all the time, it comes back, retests, and moves away. And that's exactly what happened here. So this would have been an relatively easy trade to take. When price gets in there, you look for a reason to time and put your stops below that structure, because that's the place where that idea gets invalidated, right? So it will be something like this. You get in, you got to look for a reason, when to get in, and you can have different reasons for that. You can go to the lower time frames and find, other structures that tells you that the market is reversing or that the buyers are getting control again. And if you did, then you already, well, depending on how you frame that structure, it would have been, well, I'm not going to say that you would have had, the precise entry, but even if you only had the upper area of that order block, you already are sitting in above 1R in profit. And this is only the beginning, right? It doesn't, because to the left, we don't have a lot. We do have a order block here, a bearish one that's holding price. But as you can see, this is the second retest of that order block, right? So it's quite likely that it's going to continue to break it. Not guaranteed, but it's very possible. And I would say it's likely because the structure that we're going to, the next structure, is actually that bearish order block ahead of us, right? Or above us, I should say. So if that's that is the opportunity that we saw. The train already left, of course, on this trade, but there was a great setup from yesterday. Let's look at. Let me see if we have any other questions in the chat. All right, we have Alex. Making a great point here, saying when analysts start to say at national television news that gold is gonna hit $3,000, I start looking for sell levels. I agree with you. I don't know if 3,000 is the actual number that we should, consider as a selling, the actual number that they should be saying necessarily. But yes, when the masses, and that also includes, anchor, people, commentators on national television, having opinions on the market. That's when people who are not in the financial sector talking about, this is the area or this is the asset that you should be buying. Now is the moment. Usually that's a good sign to start getting out of the market. So I totally agree with you, Alex, on that one. All right, so we have someone here saying something about the turtle soup. I don't know if this is a joke or not, but I have no idea what a nigiri candle is. Maybe you guys can explain that to me. It's not part of my. Maybe it's a sashimi and nigiri. I love them, but on my plate, I have no idea what they are on the charts. So if you guys don't mind, enlighten me if it isn't a joke, because I would like to know which what they are. Um, who here loves sushi? I do. I love sushi. All right, so let's see. Oh no, no, don't take it that way. It's not as meant as as an insult. I'm being funny with the fact that I don't know anything about it. So I would like to know about it, if you don't mind, what a nigiri and what a sashimi candle is, because I'm completely never heard of that. But that doesn't mean it's I'm making fun of you at all. Don't take it away, please. It just shows that, as traders, we have different views and different terminology we use in the market. So there isn't there are many ways, and maybe you're talking into same thing just in a different way, and it's all fine. All right, so so let's look at pound the pound against the dollar, as that is the other major pair that many traders like to trade. If you have any questions about if you have any questions about the risk management or trading, or you have a specific asset or a specific structure you see in the market and you would like my opinion on it, my breakdown of that, just let me know and we can discuss that for sure. That's why we're here, right? To look at the market together and find opportunities, talk about anything that is related to trading, share our experience as much as possible. All right, so on the weekly time frame, of course, we are reacting similarly to a weekly fresh bearish structure, which we have on the weekly time frame. So it is something that is going to be the play the rest of this week probably, and perhaps even next week if we don't break it this week. So it's something, but consider on the higher time frame, we do have a supply zone here, which is the reason why the market had that wick, right? That wick of that candle was created. It's a moving candle, so it's not done yet, and this may not end up being a wick at the end of the week, especially with NFP. But so far, I mean, the reason it's showing as a wick now is because of that order block. At least that's how I interpret the market. Let's go to the lower time frames. We do have a quasi here on a much bigger scale, which is this quasi, right? Breaking that neckline, and actually we have more than one. We have that's one quasi that we're reacting from. See how nicely that's being done. And actually we even have a different one, which is this quasi. And when you have two separate quasi, one within the other, it's best you take the one from the most extremist point, right? Let me get that straight. So you could trade this one, the one within, which is fine, but it's much better to take the bigger one, right? Because you have less, it's more selective. These are the other structures in this this area, or this setup in this time frame, and we are at one of the three structures that the market has given us of possible areas it's going to use to reverse at least have a pop or a reaction of some kind, right? So this reaction from this order block makes a lot of sense. Is this going to be the area where we reverse completely? That's difficult to say, but it makes sense that it could be, because this is one of the three ones, one of the three structures that it has, a higher than average probability of reacting to and reversing from. So it makes a lot of sense, but the market needs to confirm by forming locally in price action all the indication that it actually is going for a reversal, and we don't have that yet. It's the same thing as with EU. We are in the, if this is going to be a reversal from this point, right, we are still in the early phases of that scenario, right? So if it's going to happen and we're going to have a reversal from this area, it will be something like this, right? That's the established downtrend. We still have to take out that neckline on the daily time frame. We haven't done that yet, right? And we cannot have a reversal if we're not taking out that neckline. So let's not get ahead of ourselves and try to, call the top or the bottom in this case, catch the falling knife as, it's being called all the time. Let's not do that. Let's just wait for the market to show us what it wants to do, and then we act, right? We don't predict, we just react to what the market is telling us. And right now, the market on the daily time frame hasn't really reversed, hasn't formed any structures yet, hasn't taken out the neckline. So we can say this is going to be this is a reversal. It hasn't confirmed yet. We do have that weekly order block, right there. This is the daily, but we do have that weekly order block, so we can expect some selling pressure coming in from this area, and that's exactly what we see again, right? That's the same wick we saw with EU. If we go to the lower time frames, we do have a couple of structures in here which would would tell us, right? I have these areas as possible entries on the H4. Doesn't mean that they're almost ready to execute. It just means that it makes sense in this time frame for a reversal to happen within that area, right? I need to build the case with confluence from different time frames and different structures before I actually think this is going to be the point. That's why I have multiple structures and areas on the chart. It doesn't mean necessarily that I think it's going to reverse yet. But let's see, we did have on the weekly time frame does run from, let me mark it a little bit with this tool. There we go. That's the area, right? So we have already tapped into that area when we in this swing high, in this upward swing. However, on the H4, there's no sign of any structural break whatsoever, nothing, right? So this is the V shape, as you can see, V-shaped reaction, just one move to the downside. There we go, and a move up. Well, it didn't go as symmetrical, but it doesn't matter. It's just one move, no retracement. That's the definition of a V-shaped recovery, right? And if it's going to reverse from this point, at least in terms of order blocks and quasi, it hasn't given us any signs yet. Actually, there is no, in this time frame, in any case, there isn't anything to tell us that there is no neckline, not even the lowest point, right there, because there's no established uptrend. So there can't be any neckline either. For a continuation, that is. What we do have is this. We do have a bullish structure, right? That would be the established downtrend, and we did break the uptrend in terms of a continuation of the reversal, right? So to a buy opportunity, that is. However, we did take it out, but the only area we have here is the entry order block we have below us. So this to me is a very nice opportunity for those who might be interested in and trade this pair. I don't mean to say that this is, this is a setup. As it gets there, you need to get in. Actually, you never say that, because this is not a signal service. But this is the area, right? This order block below here. This is the area that offers the, the advantage that has edge, in my opinion, right? If we see a reason when price gets, if we don't know that yet, but if price comes back and it starts showing reasons of a reversal, then this is the area. If it hits this area, then I would be interested in looking for a long. And if I would do that, I would put the TP, my first TP would be at whatever height it reached before coming down, right? So if it reached, assuming that it got this height, that would be my target, right? The last swing high or pivot point high before it reached that structure, that entry order block on the H4. That's what I would be looking. If it already broke it, right? So the quasi has already been activated. However, that's the however, that's the trade that I see on the buy side. And on the sell side, it's that area on the weekly, which is indicated in here. Do we have something on the daily as well? No, we don't have the daily. So that's we don't have alignment all the way from the H4 to the weekly, but the fact that there's a weekly there could be, maybe we don't have the daily yet. Maybe it's going to form later in this week, right? Later on, maybe tomorrow. Yeah, perhaps tomorrow or Thursday. We'll have to see how the market continues, what information it gives us. All right, so those are the two areas that I think are interesting for traders for today and perhaps tomorrow as well. Let's see what else. All right. I left that message on more than needed. All right, let's look at the EU, because we did have an interesting area on the H4, which is I didn't show you, right? Because I was looking at the possible reversal, right, from this structure. And one of the reasons that I did that was because, of course, we do have a structure here, which is the daily, also a weekly, right there. So there's higher time frame reasons to expect price to go lower from this area. If we go to look for those quasis, I did mention this, and actually you can use you can make the trend much higher, right? The pivot points, as you can see, right? But it doesn't matter where your neckline is exactly. Fact is, it did make a higher high and it did have a higher low. So you do have enough information, not information, but enough structure to conclude that there is an uptrend here. And then the break of the neckline, and it is at that H4 order block right now. So it's going to be interesting how we react to this order block, which is what I called a borderline order block. Do we have if we go lower time frame, right? After it reached the H4 entry order block, right? If we go to the lower time frames, do we have reasons to assume? Let's see, it broke there, so this one is not valid anymore. And this one, I'll have to check with the higher time frames. Let's look. Yeah, both of them has been invalidated. So they're not there yet anymore. And so the only areas for the sellers to come in at are these two order blocks on the respective time frames. That gives us, let's measure how big this area is, how wide it is. That's 25 pips. That's what's the ATR currently on the euro. So that's less than a third of the daily ATR. Okay, that means that it is a valid entry order block for a look short. But what I need is I need the market to tell me as it is after it reached this structure, right? This is the structure, at least on the H2, and a little bit higher, a little bit wider on the H4. This is the area that I want to see the market mount the reversal from. And I don't see that yet, right? You can see how the market is still in that upwards move. Well, if you consider this, that's fine, but we're still in that upward move. And I want to see some structural break after it touches this the first time. That hasn't happened yet. So yes, I'm looking for a short there, right? And by there, I mean within this structure on the H4, this structure, and on the H2, this structure, the entry order block. But it's not obvious yet that it wants to. It did have a nice reaction. I give you that. But it's still not enough to conclude that we're going to switch back to bearish. And if we even go to the lower time frames, there's nothing here telling us that there's no reversal here. Basically, you have, this is the playing field, right? Where it can do anything in here for the next day or even 2 days, as long as it doesn't break any of these two. There isn't any new information, because it can do all kinds of patterns here, reversal, continuation patterns, and it still doesn't mean a lot. And that is because those are the structural point of the market, right? So we'll have to see perhaps later on today or tomorrow after the ADP news, how it reacts, to have an idea what it's going to do next. So far, it hasn't given us any indication. One of the other things that we could look for is if the H4 did form this bearish order block, which is fresh. What is the H1 saying? The H1 isn't telling us anything yet. As I said, the neckline is way below us, way below here. So it's at all not breaking any structure at all. And we want to see that before we can start thinking and believing and trading with this setup, that this is going to be a reversal. It needs to break some kind of structural level before, and it hasn't done that yet, right? There's no structural break in that local recent price action yet. So let's be patient and wait for the market to tell us, and let's not try to think we are smarter smarter than the market itself. All right. We have some good questions here from the audience. Someone asking how to get those order blocks on the chart. Do you mean what tools do I use in TradingView to measure or to mark them? If that is the question, then for sure I can answer. The mark is, if it's the tool, it's the rectangle tool. And if you can find it, I haven't used it in a long time. I haven't looked for it in a long time, but it is in here. Under the shapes, you find the rectangle, and there's also a hotkey, which is Alt, Shift, and R. But I've always had it in the favorites bar, right? That's the star that Jonathan was mentioning yesterday, right? So you click on it, and I use the magnets, right? You can have different strength of magnets. I use the magnets so that it automatically clicks or or sticks to the open and closes, and sometimes the also the high and low of each candle. So let's say if you have the cursor here, if you come close by, you'll see that it jumps to the low, right? It jumps to the low of the candle. That's because of the magnet. So if you combine these two tools, the rectangle and the magnet, and you come close to, let's say, the area you want to create a rectangle in, automatically it will go to the exact open or close of that bar, or high or low, which is the closest, and that way you can easily do your order blocks. And if that's the question, if that was the question, then there goes your answer. And if you mean with a question, how do I mark my order blocks? How do I know where they are, and what is a valid order block, or how do I mark them? Where does it begin? Where does it end? That's very, very simple. Actually, on Christmas Day, I have a webinar that I did in November that we reran on Christmas Day on YouTube, which I talk about the order blocks, and it goes into some detail, not complete details, but quite enough details to understand the concept that I use every day, which is the order block. But simply put, I use the open. In the case of a bullish one, I use the open of the candle number one. Let me give you a short explanation of the order blocks. We have news coming in 1 minute and 30 minutes. That's the service manufacturing PMI for the US dollar. High impact news. Everyone who's trading high stake account on the 5ers should be paying attention. Well, these are the two candles that create the order block, and I used a very simple, a much more simplified version of the order blocks that other people use, and I use the open of the candle number one, the lowest point of these two candles, which in this case is the low of candle number one, and I drag it to the right. And that's it. Very simple. Let's not complicate our lives with anything else. Very, very simple, right? So, and this is the area, to me, which buyers, in this case, because it's a bullish structure, buyers shown us that they are willing and able to buy price up from. So next time it comes back, I'm going to be interested in price doing the same, having that reaction, right? It's not as simple. There are nuances to this, of course, but that's basically the general idea. So I don't know which of the two was the question, but it is if it's the tool or how I mark my order blocks, but that doesn't matter. We cover both of them. So we have just now, the news is out. There we go. That's the 5 seconds ago. We have some moderate reaction to it, only about 20 pips in the first 5 seconds. Only about, that's more than enough. But it isn't as, well, it's still big. Let's not underestimate this movement. All right, so we're gonna be looking at this reaction. Let's put this into perspective on the H4. It is in the direction of the fresh order block, although that's the initial immediate reaction from the news. And the news came out to be better than expected for the service PMI, so which is expansionary for the US dollar, and that's why the euro is going down or going lower. At least that's the initial reaction. It can still go up from here. Let's not be tricked with the initial reaction, as a lot of times it can completely change. Let's look at the other time frames if we see anything. I don't see any structure. So as I said, these two are the lines in the sand that it needs to break before making anything it does within these two blue lines, this one and this one, doesn't really mean much, right? It can be noise. So you wait for price to do something, breaking one side or the other, so we can have a clear sign what the intention of the market is. All right, so that is for today's stream. I hope you guys enjoyed it. I did. I invite you all to join us tomorrow again. It's going to be a great show. We are going to be, trying to help you grow. That's what we always have as a goal every time we start these streams. We think, how can we help you become funded if you're not funded yet? How can we help you maintain your funded account? Or how can we, if you're interested in becoming a trader, how can we help you in that process? So if you like our show, let us know by hitting the like button and subscribing. That's even better. Also, we have a Discord for those who are not familiar with that, a Discord server who has that same mentality we have on YouTube. We are focused on your growth in building a community of positive optimism, positive vibe around traders who want to grow, who do have that growth mentality. And we're there. I'm going to be actually in about 43 minutes. I'm going to be 42 to be exact. I'm going to be hosting another workshop and talk about the issues we as traders face. So if you're not part of that yet, join us. It's going to be in your dashboard. After you buy one account, you will find a link to the Discord community, and we will be there waiting for you. So I hope you had a great day with us today. I say bye-bye to you, and hopefully we'll be seeing you soon again. See you next time. Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.